Good afternoon, everyone. Thank you so much for joining our session today, which is maximize your tax savings. Now, we all know, right, it's very important how tax saving is. So tax saving is an important part of our personal and financial planning because it can help you keep more of your hard-earned money, achieve your financial goals, and stay compliant with the law and save for your future plans. Now, we have a very special team who's come in today to take us through this journey of tax saving. Oh, I'm sorry, my voice is not very good. I have, I have some problem in my throat. So I'll quickly, hand over the floor to Akshat from Pennywise, and we also have Asta Jain, who's going to take us through the session. Very warm welcome, Akshat and Asta. Thank you so much for joining us this afternoon. It's a pleasure always to have you guys. We are doing a great job in terms of educating our participants with everything that is related to personal finance and all the financial planning. I think this is our fourth session together in association with Pennywise with Etika. Very warm welcome, Akshat and Asta.
Thank you, Shiva, for having us here. Thank you for having the Pennywise team. Hi, everyone. So happy to be back here. Spend another Friday afternoon with all of you. It's always. I was just telling Asta before we were preparing for this session. The group with Ethica is always super energetic, super enthusiastic, and with the number of interactions we do, the number of questions they ask, it feels great to kind of share this information. So once again, thank you so much, everyone, for joining in today. We'll get started. Shiva, should we go ahead and get started?
Absolutely, Akshat.
Sure. Okay. So yes, before we, once again, a very warm welcome. The subject today is something which I think is of interest to each and every one of us, right? So taxing turned relaxing. I know taxes are usually something that even I don't get very well. And that's why we have Asta, who is our master, who helps with all of our taxes, all of our planning, and, helps share all those tips and tricks. So Asta, if you could go on the slideshow mode to move on to the next slide. Yep, thank you. So namaste and a very warm welcome to all of you. And, I wouldn't waste too much of time before getting started. But as you all always know, there is this disclaimer that we would like to share. And not because we want to kind of, make you afraid or scare you, but just to make you more aware. We at Pennywise are financial educators. We have a group of, financial planners, CAs who are working day in and day out to get the best content, to simplify all the concepts out there and help you learn about your personal finances. Right? In no manner are we affiliated to any organizations. Are we selling any product? All we want to do is educate you and help you with every personal financial aspect, right? Again, during the session today, there are a number of things that Asta would share, right? But this is all for educational purposes. As much as all of these are vetted, she is a practicing CA for almost 10 years now, in fact, more. And, she has all the experience to share with you. But when you go ahead and file your taxes, always make sure that, you're doing it as per the legal system. If required, please do get it double checked with your CA. Cool. And yes, so say hello to your tax mentor, CA Asta Jain. I think she has more number of, qualifications than the amount of I don't know how do I compare it to, but if I was even able to do one or two of them, I would have considered myself lucky. So we have the best coming over to you to help you help take you through this journey of learning about your taxes. Before Asta introduces herself and takes this session forward, come on, we need energy. And as you all know, I am famous for not having my lunch before doing these sessions, right? Because I just get too anxious. And I think Asta was telling me even she didn't have lunch because she was, super, she was busy preparing for this session. So quickly tell us in the comments. We need your energy to transfer to Asta so that, she can be super pumped up to take this session. How excited are you? And I already see tens and hundreds coming up. Wow. We see some eights and nines. We hope by the end of this session, we convert all of those eights and nines to at least 10, if not more than that, right? Awesome. Awesome. Thank you, guys. Thank you so much for that warm welcome. I see one 9.9 as well. Awesome. Awesome. Okay, we'll try our best to go ahead with that point one. Great. Asta, over to you. Warm welcome. And yes, now the floor is yours.
Okay. Thank you, Shiva. Thank you, Akshat. Thank you for such a warm introduction. I hope I am clear and audible to you. If you can just confirm, we can go ahead and start our presentation. Okay, perfect. So, so the topics for today, what all we will be covering is, we'll be covering how your salary is being taxed, what are the various components in your salary structure, and what are the taxation on each salary component. Then we will also be covering what are the various different regimes of taxation. There is an old regime, that is an existing regime, and a new regime which was introduced by the finance department. So we'll see which regime is beneficial for the assessee. Then we'll also understand that how income from house property is being taxed. Then we'll also cover what is Form 26AS, what is Form AIS, what is Form TIS, and what role they play in while you are filing your income tax return, how to download it, how to interpret, and how to use it. Then we'll also be covering the taxation of various investments. And in the last, if time allows, we'll also be covering how you can save your taxes in case you are incurring a capital gain or you are incurring a capital loss. So let's begin. So to start with, what does an ideal salary structure look like? So all of you are aware of your salary slips that you get every month, or you join a company, you are able to have an appointment letter wherein you are able to see what all components the employer is offering you. So I will first look at some of the ideal components which most of you will be able to see in your pay slips. Either 2 or 3 will match, or 3 or 4 will match. So what does an ideal salary structure look like? So an ideal salary structure will normally include a basic salary. This is there in every individual's payslip, every individual's. This is a component which every employer offers. Then the second component is house rent allowance. The third component is special allowances. The fourth is leave travel allowance. This may or may not be there in your salary slip. And similarly, bonus. Bonus is normally given by employers on a yearly basis, on an annual basis, or on 6 monthly basis, or a Diwali bonus or something like that. So that bonus component is also not very common, and everyone will not be able to see in their pay slip. So it varies from individuals to individuals. So now this is an ideal salary structure wherein you have these components. Now we'll talk about how these structures are being taxed and how you can plan your affairs in order to ensure that you can maximize your tax savings. Okay, so in this particular slide, I will be taking you through a comparison of the old regime, which is also referred to as an existing regime, and the new regime of taxation vis-a-vis each of the ideal salary components. So first of all, basic salary is there. Basic salary is fully taxable in the old regime as well as in the new regime. There is no change. We'll be explaining what is old regime and what is new regime in subsequent slides. Don't worry. Then the second component which I want to highlight is house rent allowance. House rent allowance is fully taxable in case of new regime. However, in case of an old regime, it is taxable subject to some exemption which is available, which I will cover how much exemption is available and how to calculate that exemption. The third component, special allowance, it is fully taxable in old regime as well as in the new regime. In leave travel allowance, it is just like house rent allowance. It is fully taxable in new regime. In old regime, it is allowed up to a particular amount, and we'll see how much amount you can claim as an exemption under old regime. Bonus is fully taxable in old regime as well as in new regime. So now we'll cover some of the basic allowances and perquisites and how it is being taxed and how you can use them to maximize your tax advantage. So first is house rent allowance. In case of house rent allowance, under new regime, it is fully taxable. Under old regime, it is exempt up to a specified limit. So what is that specified limit? So as per the provisions of Income Tax Act, you have to calculate the exemption amount. So to calculate the exemption amount, you have to calculate that the least of the following three things is exempt. So the first component is actual amount received, the actual amount of house rent allowance that your employer is giving to you. The second component is rent paid, the rent that you are actually paying to your employer minus 10% of your basic salary. The third component is 50% of your basic salary if the house is located in metro cities, that is Delhi, Mumbai, Kolkata, and Chennai. And in case your house is located in non-metro, then you calculate 40% of basic salary. So once you arrive at these three figures, the least of these three components is considered to be an exempt. Now I'll try and explain this with the help of an example. So I hope my Excel sheet is visible to you all. Okay. So in this particular example, we are taking that this individual is drawing a salary of 12 lakh rupees annually, 1 lakh rupees per month. Here, if you see, we'll just see the relevant figures for us. The basic salary is 50,000 per month and the annual salary is 6 lakh rupees. House rent allowance is 25,000 per month and the annual house rent allowance comes out to be 3 lakh rupees. He's staying in Delhi. The city of residence is Delhi. He's paying a rent to the landlord of 18,000 per month, which means 2,16,000. Now, in this particular example, I will help you calculate how to calculate the income under the head HRA. So now, for HRA calculation, we have these inputs that city of residence is Delhi. I am on column F and J. The city of residence is Delhi. Rent paid is 2,16,000, that is 18,000 into 12. The HRA received from the employer is 3 lakh and the salary, basic salary is 6 lakhs. So now I'll calculate least of the following is exempt. Number one, actual HRA received, that is 3 lakh. Rent paid, rent I am paying is of 2,16,000 minus 10% of salary. So my salary is 6 lakh rupees. So that is 10% is 60,000. So 2,16,000 minus 60,000 comes out to be 1,56,000. So this is the second component. The third component I will take as 50% of salary because this particular individual is staying in Delhi. So in case of Delhi, I have to take 50% of salary. So 6 lakhs, 50% is 3 lakh. So now my three components are ready: 3 lakh, 1,56,000 and 3 lakh. So now the provisions of the act says least of the following. So that is 1,56,000. So I'm getting a HRA of 3 lakh rupees. Here you can say I'm getting a HRA of 3 lakh rupees and I'll get an exemption of under section 1013A of 1,56,000 rupees. So I hope I am clear on this. Now I'll go to some other important aspects which I would like to highlight in case of house rent allowance. It is quite possible that some of the employees are not having house rent allowance as a component which the employer is offering in your salary structure. So in that case, what to do? You are paying a monthly rent, you are incurring that expenditure, but since HR is not there in your salary structure, you're not able to claim the HRA. So for this, the Income Tax Act has provided for a particular section wherein if HR is not provided by the employer, you can claim a deduction of rent paid up to a maximum of 5,000 per month. That is 60,000 rupees can be claimed subject to certain conditions, which I am not going into detail. Another thing which I would like to tell you, which you have to take care of, is that whenever you are paying a rent to your landlord and that rent exceeds 50,000 rupees or more, then you are obliged to deduct TDS at the rate of 5% from the rent amount. Now, this TDS need not be deducted every month. For example, you are staying for the entire year in a particular house. So when you are making and you're paying the rent of 50,000 rupees, so 5% comes out to be 5,000 TDS. So when you are making the final payment for the month of March, that is 1 lakh rupees, 5,000 each month, the annual TDS component will come out to be 60,000 rupees. So you will deduct that from the rent of the month of the March, that is 1 lakh. So 1 lakh minus TDS 60,000 for the entire year is equal to 40,000. So 40,000 you will pay to your landlord and 60,000 you will have to pay to the government. And since there's one more rule, that in case your monthly rent exceeds 1 lakh rupees, sorry, your annual rent exceeds 1 lakh rupees, then it is mandatory that you have to obtain a PAN of the landlord, and that has to be reported in the income tax return you are filing. So when you are depositing TDS to the government, the 60,000, obviously you would need the PAN, because you'll file the return, and that accordingly the TDS will be reflected in your employer return, and he'll be able to claim a credit for the same. Another important question which is normally frequently asked to me is that can we pay rent to our parents or spouse in a case where house is either owned by your parents or your spouse? So the answer to this question is yes for parents. For spouse, subject to various checks and conditions that we need to verify. So in case of parents, yes, you can pay rent to your parents, provided you have a proper rent agreement in place. You are paying rent to them every month through bank account. I would prefer that even if the amount is less, you're paying very less amount, let's say 5,000 or 10,000 or 15,000, it's always better to pay through bank account. Then if your monthly rent exceeds 50,000, then you have to deduct TDS at the rate of 5%. If your annual rent exceeds 1 lakh rupees, then you should obtain PAN number of your father or mother. If they don't have PAN number, then you should apply for their PAN number. And most important, when you are paying rent to your parents, then they should disclose this income in their ITR, and they should file the ITR. This is the most crucial and the most important point. And next point is that the rent which you are paying to your parents should be market rent for similar property. In case of spouse, I would advise you to properly check the case. There are various conditions wherein clubbing provisions get attracted in case of spouse. So we have to carefully analyze in a scenario where you end up paying rent to your spouse, whether clubbing provisions are getting attracted or not. Because if clubbing provisions are getting attracted, there is no point that you pay rent to your spouse. So that has to be carefully analyzed on case-to-case basis. The next component which I would like to take you through is leave travel allowance. This is another component which is fully taxable in case of new regime. However, in old regime, it can be made exempt up to a specified limit. I hope I'm not going very fast and everyone is able to follow me. Okay. Thank you. Thank you for the response. Okay, so in an old regime, it is exempt up to a specified limit. So what are the conditions for claiming LT exemption under old regime? So the first condition is that you should do a actual domestic journey. International journeys are not covered. You should do a journey. Who all can accompany with you in this journey is you can go, your spouse can go, your children can go, your parents can go if they're dependent on you, your brother and sister can also go if they're dependent on you. How much exemption is available and how many times it is available. So only traveling cost actually incurred will be incurred. Boarding, lodging, and taxi, food, all this is not available under leave travel allowance. Exemption is available only twice in a block of 4 years. Currently, calendar year of 2022 to 2025 is going on. So in this block, you can claim reduction twice. If you're able to claim reduction only once in this calendar year, you can carry forward your one LTA eligibility to next block of calendar year, that is 2025 to 2028. Yes. So now I'll talk about additional components which may be included in a salary structure to increase your tax savings. The first component which I would like to advise is that children education allowance. So children education allowance, if you have 2 children or 1 children.
Sorry to interrupt.
Yeah.
On the previous slide, I think there was a question, maybe you'd like answering that since it's on that topic. The question was, what if the parents are not under the, they don't have a taxable income? In that case, how do we go about it?
In case of LT or in case of HRA?
In case of the HRA.
so you are paying rent, and if even after including rent as part of their income is less than the eligible limit, then there is no requirement to file the return, and you can just skip the return. But I would still advise that if you are paying rent, even if their income is less than the basic exemption limit, there is no harm filing the return, because return is something which they will also be even if they're applying for a loan, or they are opening a mutual fund, or they are creating a FD, or they're applying for a visa, return is something which is used by every individual. So even if their limit is less than the basic exemption limit, I urge everyone to still go ahead and file their return so moved. I hope I am able to answer. If there is any further question on this particular aspect, I am happy to address that, or we can cover all the questions in the end. Akshat, should I go ahead or should I wait?
So I think we should go ahead. We can.
Okay. Okay. We'll take the questions in the end. I think so. Sure. Because I think a lot of things which people are asking will be taken care of while we move further in the presentation. Okay, so I was on children education allowance. So if you have 2 child, then you can request your employer to add children education allowance in your salary structure, and thereby you'll be able to claim 100 rupees per month per child. So if you have 2 children, you'll be able to claim a deduction of 2,400 rupees per month. Sorry, annually. And in case you have if you have 1 child, then you are eligible to claim 1,200 annually. Similarly, you can also request your employer to amend your salary structure, maybe and include hostel expenditure allowance up to 2 children, maximum of 2 children. You are eligible to claim 300 per month per child additionally. So by including these 2 components, you are roughly able to claim a deduction of 200 for children, and 300 means 600 for 2 children or under hostel expenditure allowance. So roughly a deduction of 800 rupees per month per child. Another component which I would the employees can actually ponder upon and get it included in their salary structure by doing a discussion with the employer's car lease facility. So what is car lease facility? Car lease facilities, either the employer, there are 2 options. Either the employer leases a car and gives it to the employee for his personal as well as official purposes. Or second purpose is that suppose the employees are planning to buy a car. So instead of buying in their own name, they can buy in the name of their parents, maybe mother or father. Just for our discussion, I assume that the car is being bought in the name of the father. And there's a tri-party agreement which is being entered between the father, the employer, as well as the employee, wherein the employer has taken the car on lease by the father and given it to the employee for his use. So this is referred to as a tri-party agreement, wherein the employer has taken on the car on lease and given to the employee. And in this particular, there are 2 options, that the running and maintenance charges are paid by the employee himself, that is vehicle maintenance fuel are being borne by the employee, or second scenario is being borne by the employer. And there is also a possibility that the employer can reimburse you the cost for the chauffeur. So if this particular thing is being planned, how will the taxation arise? So in this particular case, if your running and maintenance charges are paid by the employee, then the taxable value is 600 for a cubic capacity of 1.6 or less, and 900 per month in case of cubic capacity of 1.6 or more. Similarly, in case of if your running and maintenance charges are paid by the employer, that 1,800 and 2,400 per month. And for chauffeur, additional INR 900 will be added. I'll explain it better with the help of an example. In this particular example, there are 2 employees, Pooja and Priya. Both of them are drawing a salary of, let's say, 25 lakhs. In this particular example, Priya has taken a car lease benefit, and the value of car lease rentals paid by the employer is 4,80,000. So this 4,80,000, if I compare it with my example, wherein there was a tri-party agreement between the employer, the father, and the employee. So in this particular example, the employer is paying this 4,80,000. Instead of paying it to Priya, he is paying that amount to the father. So you are actually, as a family, receiving the entire amount, that is 25 lakhs, but it is being split into two parts. You are not receiving as a part of your salary, but it is being given to your father by way of car lease rentals. So in this scenario, the Pooja has the salary of 25 lakhs, Priya has done a tax planning and her taxable salary comes out to be 20,20,000. Now, since the employer is providing you a car lease facility, this particular facility will be taxed as perquisite in your hands. And these values, which I just read through, that 600 and 900 per month, it's based on cubic capacity, and for chauffeur 900 per month. So this is the value of perquisite that will be added in your hands while calculating tax on salary. So in this particular example, since the car cubic capacity is 1.8 liters and it also includes driver, we have just added 2,400 per month plus 900 per month, which comes out to be 3,600 per month, annually 39,600. So this will be the perquisite value which will be added in the hands of Priya and which will be offered to tax. So here total taxable salary for Pooja is 25 lakhs, taxable salary for Priya is 20,59,600, and you can see there is a considerable tax saving in the hands of Priya by availing this car lease rental benefit. So there's a saving of more than 1,30,000 something, 1,30,000 plus say. So this is one additional component which you can explore and add in your salary structure by discussing it with your employer, and you can amend your salary structure and avail tax benefit. Another component which you can discuss with your employer and add is, and before discussing, you can do your self-analysis whether it is coming out to be beneficial or not, or you can take help of any chartered accountant, is rent-free accommodation. So rent-free accommodation is just like that. The employer is paying rent for the accommodation in which you are staying. So either you can take HRA or you can take RFA. So that you have to calculate and analyze and see within your salary numbers that which component is coming out to be beneficial. Normally, from our experience, rent-free accommodation comes out to be beneficial for high income groups. So in this particular example, I will just touch upon, because I'm not too sure whether the audience which is attending this conference is in which income tax bracket and whether they will be able to avail the rent-free accommodation or not. I'll just touch upon, and if anyone is interested to avail this particular component, we can go into further detail when we are into the Q&A round. So in this, there are two questions. Either you can avail a house which is owned by the employer. You can stay in a house which is owned by the employer. So in that particular scenario, a perquisite value will be added in your salary when they are calculating tax, and that taxable value will depend upon the population size. Like, for example, if I am living in Delhi, the taxable value will be 15% of the salary, because the population in Delhi is more than 25 lakhs. Suppose there's a population where it is 10 lakh but less than 25 lakh, then 10%. And if it is up to 10 lakh, then the limit is 7.5% of salary. The second scenario is where house is leased by the employer, wherein the house is also taken on rent by the employer. Then what will be the taxable value? So it will be lower of 15% of salary, or whatever rent the employer is paying to the landlord. So either of the two will be considered, the lower of the two will be considered as a taxable, perquisite taxable value in your hands. And whatever else amount is being paid is considered as free. So basically, suppose in an example, the employer is paying a rent of 1 lakh rupees per month. So that 12 lakhs goes to the person from whom he has taken the house on lease. And then that portion, that 12 lakh rupees will not be added as a part of salary structure, and only a taxable value that is lower of 15% of salary or 12 lakhs will be considered as a taxable value in my hands. Okay, so now I will touch upon various deductions and investment options. Deductions come investment options which can help you save taxes. So this is the most popular and widely used and everyone knows about it, is Section 80C of the Income Tax Act. In this, you can contribute in life insurance, in PF, in PPF. If your employer is not offering PF, you can contribute your amount in PPF. Then you can also invest into a tax saving fixed deposit for 5 years. You can do Sukanya Samriddhi Yojana, which is especially there for girl child. I highly recommend people to do this. If you have a girl child, I would highly recommend you do Sukanya Samriddhi Yojana scheme. Even if you are still doing life insurance, do Sukanya Samriddhi. Then any tuition fees that you're paying for your children, that is also included. So there are a lot of investments which are covered under Section 80C. The maximum amount of deduction that you can avail under 80C is rupees 1,50,000. And again, this is only eligible under old regime. In new regime, this is not available. So even if you are opting for new regime of taxation, although 80C is not available, but as a advisor, I would like to recommend that you continue doing your PF or PPF contributions, even if you are opting for new regime, because it's a good investment, because whatever interest you earn out of the PPF account, that is tax free. So it's a very good investment option, even if you are not getting any tax benefit out of it. The next portion which I would like to touch upon is Section 80D. In this, you are able to get a deduction in respect of the health insurance premium. Again, this is also not available under new regime of taxation and is only available under old regime of taxation. How much deduction is available? So if you are below 60 years of age, so for you, your wife, your spouse, maybe wife or husband, or children, you will get a maximum deduction of 25,000. If that insurance cover also include your parents and they are dependent on you, and both the parents are less than 60 years of age, then the deduction, the maximum deduction that you can get is 50,000 rupees. In case you are below 60 years of age, but your dependent parents are above 60 years of age, then the maximum deduction is 25,000 plus 50,000, that is 75,000. And you are also above 60 and your parents are also above 60, then the maximum deduction that you can avail is 1 lakh rupees, 50,000 each in each group. Now we are speaking about old regime, new regime of taxation in each and every slide. But what is this old regime and what is this new regime? Let's see. So this new regime of taxation was introduced in the finance bill and is effective from 1st April 2020. So 2 financial years, that is financial year 2021 and 21-22 has passed, wherein employees were given an option to opt for the existing regime or to go in for the new regime. In this scheme, although a lot of deductions and exemptions are not available, but the department has done some tweaking in the income tax slab rates, and it is available to individual taxpayers to pay tax at lower rates. They have created a lot of slabs. We'll see that in subsequent slides. So another question before we go into the nitty-gritties of what is the tax rate and everything, and how much what is the comparison of tax that comes out in case of old and new regime, you would your mind would be going through this question: how to switch between old and new tax regime? Whether if I opt for a new tax regime, can I go back to the old regime, and how many times I can do this? So friends, if an individual who is a salaried income and has no business income can choose between the new tax regime and old tax regime every year. So suppose for this particular year, you have opted for new regime. In next year, if you are having only salary income or income from capital gains, other sources and house property, no business income, no PGP, then you can opt it for every year. So one year new regime, then old regime, then new regime, then old regime possible. Another question which comes to the mind, suppose while giving investment declarations and when my employer asks me that you will be opting for which regime, because they have to calculate TDS when they pay your salary. So you suppose have declared that you are taking an old regime of taxation. But what if while finalizing the return, your CA says that in your case, new regime is beneficial. So what to do? Okay, will I be able to change the scheme at the point of filing the return? The answer is yes. So at the time of filing the return, even if you have declared the other regime of taxation, you can change the regime and file your income tax return. So some of the deductions which are not permitted under the new regime of taxation, which we have mostly discussed in the previous slides, are the first one is standard deduction of 50,000. All of you know that being salaried class, we are able to get a standard deduction of 50,000. This was being replaced in lieu of the medical and the transport reimbursement which the government had offered. It was replaced by the standard deduction. It was introduced with 40,000, now increased to 50,000. And we all hope that the standard deduction goes up in the upcoming budget on 1st of February. So this is not allowed in the new regime. The another component which is not allowed is house rent allowance. You can have it as a component in your salary structure, but the exemption will not be available under new regime. Similarly, leave travel allowance exemption is not available under new regime. Medical insurance ATD not eligible under new regime. ATC, ATCCD, NPS, etc. not eligible under new regime. Another most important aspect. So whenever you take a loan for a self-occupied house, you pay interest to the bank. So you are able to claim a deduction of this interest at the rate of 2 lakh up to a maximum of rupees 2 lakhs. So this deduction, which you were able to claim under section 24B in case of self-occupied property, is not eligible in case of new regime of taxation. However, if it is not a self-occupied house, it is a let-out property. So the interest which you are paying will be allowed as a deduction irrespective of the regime, whether you are in old regime or you are in a new regime. In case of let-out property, you can freely claim this interest. And in case of loss, this loss can be adjusted with salary. Suppose you are incurring a loss of 2 lakh rupees, you can adjust it with salary, but up to a maximum of 2 lakhs, the balance will be carried forward for a period of 8 years. This we'll be able to, I'll just take you this particular aspect with the help of example when we do the taxation of rental income in detail in subsequent slides. So what are the tax rates under the old regime and new regime of taxation? So in this slide, you will be able to see that in case of new regime of taxation, the government has introduced slab rates in progressive slab rates increasing 2.5 lakhs each and tax rates increasing 5% each. So and however in old regime, there are only 3 slabs, that is nil, 5%, 20% and 30%. So only 3 rates, 5, 20 and 30. However, in new regime, we have 5, 10, 15, 20, 25 and 30. With an increase of 2.5, 5 to 7.5, 7.5 to 10, 10 to 12.5, 12.5 to 15 and above 50. So this is the majorly the change in the new regime of taxation, that they have changed the slab rates and the tax rates. So now what are the surcharge rates at different income levels? So suppose there's an individual who is earning above 50 lakh rupees of income but less than 1 crore, the surcharge on the income tax will be 10%. If your income levels are between 1 crore to 2 crore, the surcharge rate will be 15%. If it is 2 crore to 5 crore, the surcharge rate will be 25%. And if it is more than 5 crores, the surcharge rate will be 37%. And over and above this, health and education cess off at the rate of 4% will be added on. Another important point, maybe for your parents, so you would be aware that in case of normal provisions of income tax, exemption limit for senior citizen is 3 lakh. Super senior are people who are above 80 years of age. It is 5 lakh rupees. However, in new regime, across all individuals below 60, above 60, above 80, for all of them, the basic exemption limit stands at 2,50,000 only. So this particular slide shows that what will be the tax in case of old regime and new regime under different scenarios. Here we have taken an assumption that this particular person is a resident individual. He is below 60 years of age. He is claiming deduction at the rate of 1,50,000 under section 80C. He is claiming deduction of 25,000 under section 80D. And his total income consists only of salary income for the purpose of simplicity. So you're able to see in case of high income groups, that is 15 lakh and 30 lakh, the new regime is coming out to be beneficial. However, in case of lower income groups, 7.5 lakh, 10 lakh and 12.5, the old regime is coming out to be beneficial. So I think so it varies from case to case basis that which regime is coming out to be beneficial. Other deductions which are available is, just to highlight some, that suppose you are buying an electric vehicle and you have taken a loan on that and you are paying an interest on that, and the loan is taken between 2019 to 31st March 2023, then a maximum amount of 1,50,000 interest can be availed as a deduction. The interest that you earn on your saving account, you can claim a deduction of 10,000 on that, or actual interest, whichever is lower. Then if you are a senior citizen, this saving account interest that can be claimed is up to an amount of 50,000 rupees. Then if you are doing any donations, you can just, whether if the donations institution is registered under section 80G, then you can take a receipt from them, and that can also be availed as a deduction in your out of your total income. Then if there are persons with disability in the family, for them also some deduction is available. Then although this deduction has lapsed, but in the previous regimes, people have been able to avail these deductions, and hopefully if this in this budget this deduction is extended to further financial years, you can claim it again. This is for interest on housing loan for affordable group housing up to a maximum amount of 1,50,000 on interest. So these are the some deductions which I wanted to just highlight and bring it to your picture, so that if any one of you can just pick and claim these deductions, it would be great. So now, what is Form 16? What is Form 26AS? You often hear these terms, and you are not aware what you should look at in these forms, where to download it from, where to download it from, and what all is included in these forms. So I will just take you through these forms. The first is Form 16. Form 16 is a certificate which your employer gives, and this form consists of two parts, Part A and Part B. This is a certificate which is given by the employer on annual basis. And if you have a fixed deposit in a bank and you are earning interest on it, normally your banker will give it on a quarterly basis, but your employer will give it on an annual basis. So this Part A actually consists of your PAN number, your TAN details, your name, your address, your how much salary you have got, how much is the amount paid or credited, and how much TDS has been deducted. And the Part B consists of details about your all the other incomes, the deductions, the tax payable, and the salary paid, etc. So the Part B actually takes care of and depicts all the investment proofs that you have given. Like you have claimed 80C, it will show you 80C. If you've given interest paid on housing loan, self-occupied property, 2 lakh deduction, it will show that, and it will also show a set of that with the salary income. Then it will also show 80D deduction. Then it will also show 80G. If you've disclosed all this to the employer, then it will show all those deductions. So Part B is a very, very important document which you need while filing your income tax return. Another important form is Form 26AS. I'll just try and open a Form 26AS and show it to you. So I hope my screen is visible. The 26AS is visible. Okay, thank you. Okay, so this is typically a 26AS which we extract from the income tax software, income tax website. So I have just removed these details because of confidentiality reasons. So here your PAN number will appear. Here your name will appear, and your address will appear. This address will be the same as you have it in your PAN records. So here, if you see at serial number 2, this is the salary which the employee has got, because this is taxable under section 192. So here the name of the employer will appear. I have removed it for the purpose of confidentiality. The salary is appearing and the TDS is appearing. So you have got a salary of rupees this much and a TDS of this much. So these two components, very important, should match with your Form 16. And you can also match it with your bank statement, that how much salary you have received. So whenever you're finalizing your return, you should match this salary as per Form 26AS with Form 16 with the bank statement. So very important exercise. And other incomes, obviously, suppose he has got it from Zerodha, some dividend has come, 567, on that 43 rupees dividend has come, so that is appearing. So all incomes on which TDS is deducted will be shown on this Form 26AS, which is extracted from the your login credentials from the income tax website. Suppose you have deducted any, suppose there is any tax deduction on sale of immovable property, that will appear here. And any self-assessment tax or any advance tax paid will appear under Part C. Any refund you have received from Income Tax Department for previous year in this year will reflect in Part D. Okay, so Part E is a very, very important, although in this SST there are no transactions present, but this shows the details of SFT transactions. So SFT transactions are referred to as suspicious financial transactions. So here any high value transactions like payment of credit cards, purchase of immovable property, sale of immovable property, creation of new FDs, then purchase of mutual funds, all this will appear here. So when you are finalizing your return, just have a look at this form 26A and this particular section, that you're not missing out on any detail while preparing and finalizing your return. Then Part F is again tax deducted on sale of immovable property. So just have a look, like in this particular case, the employer had a transaction amount of 3,40,000 rupees. So we had included this in the return. So it is very important to go through this form 26AS and do an analysis and understand and interpret what all information is available with Income Tax Department and while finalizing your return. So I'll just go back to the PPT. Okay. So how to download and interpret Form 26AS? This I have covered what is Form 26AS. Part A shows tax deducted at source. This all I have covered. I've even shown you the screenshots as to what all it will include. In case of TDS deducted for the landlords, it will appear in Part A2. That data also you'll be able to get from Form 26AS. Then the details of TCS will come up here. Tax paid, tax refund. So all that will come in. Another important two forms. What is AIS and TIS? Annual Information Statement and Taxpayer Information Statement. So these are the two new introduced forms which have started being reflected. These two forms actually shows you details of your total income, be it salary, interest, dividend, sale of mutual funds, sale of shares, foreign remittance, and everything. So TIS shows the total information and AIS shows transaction-wise statements. And both AIS as well as TIS can be downloaded by logging into your account at the income tax portal. So now with the amount of information which I'm showing you is available in Form 26AS, AIS and TIS will make you aware that there is a lot of information which reaches the Income Tax Department, which you are also getting by logging into your account. So it is very important not to miss any details while you're finalizing your returns. So this is how a typical TIS, taxpayer information summary will appear, which you are able to download from your login credentials. Salary, in this particular, his salary was 1 crore. They had given, you have received a rent, they've given a dividend, they've given an interest, they have given a sale of securities and mutual fund. I would like to highlight here that practically when we do income tax returns for so many individuals, we have seen a scenario that we are able to get a lot of information from this AIS and TIS, which the assessees don't remember themselves. We say, sir, you have a bank account in State Bank of India, you have a bank account in Bank of Baroda, but they don't remember. And when we ask for statements, then they give the statements, we process them, and we are able to include that in the income tax return. Similarly, people buy and sell mutual funds, but they forget when they're giving data to us to finalize their returns or for any advisory, they are not aware that they have sold the mutual funds. With the help of this information, which we are able to fetch from their login credentials, we tell them, sir, you've sold a mutual fund, please give the details. So it is very important to see these information summary accounts, because since you are day-to-day busy with your own affairs, you often forget that where have you invested and what investment you have sold. So just have a look at it before finalizing your return. Otherwise, if you do not include all this, you might end up receiving an income tax notice that the return filed is inconsistent with the information available with the income tax records. Because income tax records, let's say, saying that you have sold a mutual fund of 10 lakhs on which you have a gain of 2 lakhs, but that is being not reflected in your return. So you'll end up receiving an income tax notice. So to avoid doing that, do process all this information. This is how a typical AIS will look at. This will give you a detail. So TIS gives you total figures. AIS will give you transaction-wise details of salary, dividend, interest from savings, sale of security. So it will give you more detailed information of TIS. So friends, ideally you should match your bank statement versus Form 16, which the employer gives. Bank statement is you will get from bank. Match it with Form 16 taken from employer. Match it with 26AS extracted from the website. Match it with TIS and AIS extracted from the website, and then finalize your return. So maybe due to constraint of time, because we are already at 4:20, I would not indulge into this activity, but here are the steps how you can download your 26S. And if you feel any doubt, you can connect with me later on once we complete the session, and you can try this activity once we complete the session. And in case of any doubts, you can definitely get in touch with me. And you can also try and download your AIS and TIS. So now the next topic which I would like to cover is implications of house properties. So we have talked about salary. Then another important aspect which we wanted to cover for you guys is what is the taxation of house property, because normally we as individuals and are educated by our parents that you should plan and buy at least some land and property and do some investment and plan your financial affairs. So most of us end up buying a house and putting it on rent. So how is this house property being taxed? So there are two types of house property. I have bifurcated into two parts. One is self-occupied. Self-occupied means a house in which you and your family is staying, and one is let out, which means you have rented out. So in case of self-occupied properties, if a assessee is owning two house properties, there is no tax implications up to two house properties. But if you are having more than two house properties and it is not let out, then it is considered as deemed let out by the government, and the market rate is considered and being charged as gross annual value, and the rent is being charged and being taxed. In case of let out property, the rent received from all let out properties, B1, B2, B10 or B100, all is being totaled up and taxed under the head income from house property. So now what all deductions you can claim while calculating your income under the head house property? So number one, in case of let out property, you are able to claim municipal taxes, actual municipal house tax. Municipal tax is just like house tax. So whatever house tax you are paying, it is allowed to be deducted from your gross rental income. Important point to note here is, suppose you have you are finalizing the return for financial year 22-23, and you have paid municipal taxes for financial year 2022-23 also to the government in this year, and for previous 2 years also this year only, because you forgot to pay in those years and you have paid that in this year. So for all the 3 years, excluding interest will be allowed as a deduction from the rental income that you are charging to tax this year. So it is allowed in the year in which you are actually paying, irrespective of the year for which you are paying. Another deduction which you receive is standard deduction of 30% is allowed. Another third deduction is interest on house loan. In case of self-occupied property, a maximum of 2 lakh is allowed. However, in case of let out property, there is no limit. Now, since this is a little complex and a lot of tax planning can be done in case you have housing interest on housing properties, I'll just take you through three scenarios we prepared for yourself. So these are the 3 examples which I would like to discuss with you. There are 3 scenarios which we have created. In scenario 1, we have taken this as a self-occupied property. The principal that I am paying to the bank is 19,86,000 and interest amount is 2,22,000. So as I just told you that in case of self-occupied property, we'll get a maximum deduction of 2 lakh rupees. So this is the maximum deduction which I am able to claim, and this 2 lakh rupees will be adjusted with your salary income. So for example, your taxable salary income was coming out to be 10 lakh rupees. You will now be eligible only to pay tax under 8 lakh rupees. So 2 lakh will be adjusted with salary. So it is very important to see if you have any interest that you are paying, you should put that in your return, even give it to that, give this declaration to the employer while giving your investment declaration, so that the amount of TDS that your employer is deducting is less. Because if you don't give it and you just include it at the time of filing of the return, then you will end up receiving a refund and that refund gets delayed. So better to give it to your employer and not have lower deduction of tax. Second scenario. In this scenario, I assume that it is a let out property. I am getting a rental income. I am earning a rental income of 60,000 rupees per month. I am paying a municipal tax of 15,000. I'm making a principal repayment of 4,25,000 to the bank, interest payment of 2,30,000. So I am receiving a rent of 7,20,000, municipal 60,000 per month into 12, 720, municipal tax 15,000 reduction I'll get. So 7,20,000 minus 15,000, 7,05,000. Out of this, I'll get a standard deduction of 30%. 30% of 7,05,000 works out to be 2,11,500. Now I'm paying interest of 2,30,000. You see, it is a let out property, so I have not restricted it to 2 lakh. In case of self-occupied property, in spite of paying 2,22,000, I had restricted it to 2 lakh as per the provisions of Act. But here, since it is a let out property, there is no limit, and I can include, suppose even if it was 5 lakh, I would have claimed 5 lakh. There is no limit to it. So in this particular example, it is 2,30,000. So you are earning a rental income of 7,20,000, but you are going to pay tax only on 2,63,500. So these are some of the important aspects which you need to carefully see and see whether you are able to reduce your tax liability. Third scenario, let out. I'm paying a rent of 20,000 per month. Municipal tax paid 25,000 for area municipal taxes also paid in this year. Principal amount 2,24,000, interest amount 4,50,000. So here rental income is 2,40,000, here 2,40,000, 20,000 into 12. Municipal tax is 25,000, 2,15,000. 30% standard deduction. This is available in all cases, all let out cases. Now I'm able to claim a deduction of 4,50,000. Here you see, I'm incurring a loss of 2,99,500. So now this loss, I will be able to adjust it with the salary income, but the maximum amount of loss that I can adjust with salary income is 2 lakh rupees. So my salary will get reduced by 2 lakh and balance 99,500 I will be able to carry forward to next year, which I can claim in next year with my salary. So this is how these are various scenarios where you can calculate the income under the head house property. We'll also be sharing you with this Excel wherein I have calculated a standard, we've taken a standard example wherein the employee is earning 1 lakh of per month salary and 12 lakhs annual salary, and rent is being paid. We have some dividend income, some interest income. We have input some insurance income. So when we give you this calculator, these white columns you can input and these blue columns will be auto-populated and your computation will automatically come up. So here all the allowances will come up and your tax will be calculated and you will be able to do a analysis between which is better for you, tax liability under old regime or in case of new regime of taxation. So you'll be able to do an analysis. We've not gone through the details because I wanted to cover more aspects of tax savings instead of just diving into these Excel sheet details, because this is just a calculation part. Going back to the presentation. Okay. Another important part in case of interest is, suppose you are making a house, you're constructing a house and you take interest from banks. So there's a lot of interest that you pay during the construction of the house. So that is referred to as pre-construction interest. So any interest that you pay prior to completion of the house is allowed only when the certificate of completion is obtained. So suppose for a total interest of, let's say, 5 lakh rupees was paid till the date your house gets completed. So for that period, you'll not be able to claim a deduction. But for future years, when the house is completed, in this 5 lakh will be allowed as a deduction in 5 equal installments in subsequent years. So every year you will be able to get a deduction of 1 lakh each. And for example, there's a scenario you forgot to do your PF or PPF, you forgot to do your tax saving scheme FD, and you're not able to do any ATC deduction. So the principal amount which you are paying towards the this housing loan is covered under section 80C. So you will be able to claim deduction under 80C also. So now I'll hand over to Akshat to just have a look at take through you some quiz questions just to see that I have been able to make clear some of the points. Over to you, Akshat.
Absolutely. Testing time. How much have you all learned so far? So I know I have, every time I run through these slides with Asta, I think I learn something new, to be very honest. There's not me just boosting, but, honestly, there's so many things to this that there is something or the other that we keep learning. But yep, let's start with a quiz and see how much have you all been able to learn, right? So I hope you all actively participate. Feel free to put in your answers in the chat. Let's do this quick quiz, and then we'll move on to the next section. So question number 1 for all of you. Mr. Rahul Han, individual, has opted for new regime of taxation. He has taken a loan on which the interest is of about 2 lakh rupees, has been paid during this year. The property has been let out to Mr. Vikas. Can Rahul claim deduction of this interest in case of new regime of taxation? No, yes, no, yes. Mixed responses. A lot of no's, more on yeses. But Asta, why don't you show the answer and then explain why is it so?
So in this case, yes, Rahul can claim the deduction because he's under new regime of taxation. And in this particular case, this is not a self-occupied house, this is a let-out house. So since it is let out, this interest deduction is available. Has it been a case that this was a self-occupied property, then in case of new regime, it would not have been eligible. So since new regime, let out, 2 lakh deduction allowed. So we'll move to the next.
Yes, yes. I hope that was clear because a lot of you were saying no, but I hope you got the explanation. Next question. Okay, here's an interesting one, and I think you can take a minute to answer this, right? Because you'll need to do some calculations. Quickly pick up your copy pencil, or maybe open a Excel sheet on your laptop so that you can do the calculation. Oh, people have already started giving answers. Wow, I am not even read the question. Mr. Reddy is an employee in XYZ Limited. He earns income of 20 lakh per annum. He has taken an LIC for which premium was paid of about 60,000. He has also bought a house for which he took a loan. The loan repayment was about 30,000. The investment in PPF is about 50,000, and the interest earned by him on his FD is 30,000. Quickly calculate and tell me. Oh, I think the answer slide came up first. Is it? Nah, you guys are being clever. Come on, guys. Don't do this. Calculate and tell us. I'll tell you what. We purposely did it that way so that we could confuse you with the answer, right? And then bring you to the question slide and then ask you the question. So answer is not 140. That slide was shown up because we knew you guys will try to be smart. B. 150 is what people are saying. Sure? Sure? No, guys, the answer was right. I was just covering up. Yes. Yes, yes. So the answer is C, 1,40,000, which most of you did. It's a very plain, simple calculation. Absolutely, the Excel sheet that Asta was sharing with you. We will send this out by the end of the session. Please just put in these numbers, and in fact, it's a very, very, very simple calculation. Once you just put on these numbers, the Excel sheet will calculate everything for you, and you will be able to get the answer. So it's 1,40,000.
Yes.
Asta, anything that you'd like to add?
No, I think so. This is perfect because the interest earned by him on FD is not eligible as a ATC deduction. So 60,000 plus 30,000 plus 50,000 is the amount that you are eligible as a deduction. So 30,000 you will not get. That's the thing.
That's the thing. Absolutely. I hope everyone noticed that. Okay. Last question. The total income of Miss Radha for the assessment year 23-24 is INR 70 lakh rupees. Wow, Radha is rich. Miss Radha is rich. I need to go to her, which includes the income from salary of about 30 lakh rupees, a capital gain of about 20 lakh rupees, a rental income of 10 lakh rupees, and an interest of on FD of about 10 lakh rupees, right? So what would be the rate of surcharge? 70 lakh rupees is her total income. And I think some of you were asking a question, what is the surcharge? Asta, maybe you could take a quick minute to once again, just in a very, very short summary, explain what a surcharge is.
So surcharge is basically a charge over and above your tax rate. So we are aware that we have tax slabs. So we have a slab of 5, 10, 20, 25, and 30. So over and above this 30% of tax, a surcharge of 25% is levied. So let's say I am falling under, just as an example, I'm falling under the tax bracket of 30%, and my income is in such a bracket that I will be taxed a surcharge of 25%. So 30% into 25%, that is 7.5%, will be added over and above the tax rate. So your total tax rate will come out to be 30 plus 30 into 25%, that is 7.5, that is 37.5. And on this 37.5, you will add a 4% health and education cess, that is will come out to be 1.5. So 37.5 plus 1.5, that is 39 will be your effective tax rate. I hope I'm able to clarify the question. So everyone is saying B in this case. Akshat, you are around?
Yeah, yeah.
Okay.
Yes, so B is what everyone is, most of the people are saying. I thought you're just checking. Yeah. So let's show them the answer.
Oh, yes. So most of you were right.
Well done. Well done. Asta, you've done a good job, or we already have smart people in the group. So
yes.
Great one. Great one.
Yes.
Okay.
Yes.
I think we can move on. We still have time to cover another important aspect, right? And I think that's one of my favorite areas, because it's all about investments. It's all about planning, and then how can you actually do a proper planning with your investments to save maximum taxes. So Asta,
Right.
once again, back over to you.
Yes. Okay. So taxation of investments. So all of you most of you are now having an attraction towards the equity stock market, and with a lot of sessions with Pennywise, we are understanding the importance of investments and adding into our bucket equity shares, mutual funds, and other assets. So when you are investing, obviously you should know that what and how these instruments will be taxed, and what is the rate of taxation. So equity shares or equity oriented mutual funds. Equity oriented mutual funds means the mutual funds wherein 60% or more is invested into equity shares. So those type of mutual funds are referred to as equity oriented mutual funds. So listed equity shares or equity oriented mutual funds are in case of a long term capital gain, the tax rate will be 10% without indexation. And in case of short term, the tax rate will be 15%. So what is long term and what is short term? The listed securities which are held for more than 12 months are referred to as long term. Any equity share, if you've purchased it on 1st April 2022 and you are selling it on, let's say, 30th April 2023, you have the holding period is more than a year, and hence it will be considered as a long term. And in case of unlisted shares which are held for more than 24 months, then it will be considered as long term, and any shorter holding period will be considered as short term shares or mutual funds. On the other hand, in case of debt oriented mutual funds or any other assets, so debt oriented mutual funds, if they are held for more than 36 months, that is 3 years, then they are treated as long term, otherwise short term. And in case of short term, they are taxed at slab rates, and in case of long term, they are taxed with as 20% with indexation. The primary reason of including this slide is not to confuse it with what is long term, what is short term, just to give an idea as to what is the rate. And another important point which I want to highlight is that in case of long term listed equity shares or long term equity oriented mutual funds, gains up to INR 1 lakh are exempt for each year. So this is a planning point which I want to highlight. For example, you are about to sell a share on which you are earning 2 lakh rupees, and you are, let's say, in the month of February or March, and you are selling that share, and it is a blue chip stock, and you anticipate the market will go up. You're just selling this just if you need funds or you just want to consolidate your wealth. So what you can do, you can sell some portion of it in March, and you can sell the balance portion of it in April. So if on a hand wherein entire 2 lakh was coming as taxable, if you sell up to a gain of 1 lakh in March, that will be exempt in 2023, and if you sell the balance in 23-24, that will also be exempt. So your entire capital gain will go exempt if it is a long-term gain, and up to 1 lakh is exempt in each financial year. So this is a planning point which you can just plan when you are planning what to buy, what to sell, and you can just you are consolidating your investments. Another important thing, that suppose you are having a long-term capital gain or a short-term capital gain, whether it can be adjusted with short-term capital loss or long-term capital loss. So short-term and long-term capital gain can be adjusted with short-term capital loss, but long-term capital gain only can be adjusted only with long-term capital loss. However, short-term capital gain cannot be adjusted with long-term capital loss. So while finalizing your returns or while planning your things, that what can be adjusted against what, you need to know this rule so that you can plan your affairs. This slide we've added particularly to show you, suppose you are having a huge capital gain, suppose you're having a gain of 5 lakh rupees from a long-term capital gain, and you had recently bought a stock by a friend's advice or by just into the momentum, you just thought that this company might go up, but the recent annual reports and the trend shows that now the future of that company is not bright. So if you sell that, you will incur a short-term capital loss. So just book that loss so that it will be adjusted with the long-term capital gain, and your tax liability will go down. And then if you again want to buy, you can again buy that stock if you want, the stock on which you incurred short-term capital loss. So I'm just advising you that if you book that short-term capital loss, that will be adjusted with long-term capital gain, and you can again buy that. So that particular loss which you had incurred on that till date will be adjusted with gain, and that will reduce your tax liability. These losses, if you do not have any gain, and if there is any loss, these losses can be carried forward up to a period of 8 years. But to claim any loss in future years, it is very important that you file your returns before the due date, on or before the due date. Another important exemptions which you can plan and save some taxes and do some tax planning is that suppose you are selling a residential house property and you are earning a capital gain on that. If you buy another house property, another one more residential house property, provided you do not hold more than 2 house properties, then if you invest the capital gain into, suppose you're selling a residential house property and you're incurring a capital gain of, let's say, 10 lakh rupees, and you invest that 10 lakh rupees into buying a new residential property, then you can save some capital gain. Similarly, agricultural land, if you sell agricultural land, you buy agricultural land, you can get benefit of tax saving. In case of any long-term capital asset, whether you're selling land, building, or both, then you can plan to invest in bonds up to a maximum amount of 50 lakhs. There are some bonds which are prescribed by NHAI, REC, Power Finance. These bonds you can buy, and these are redeemable after 5 years, and you get some interest on that these bonds. These are generally referred to as tax-saving bonds, but the maximum amount that you can invest is 50 lakh rupees. Another important section is section 54F, which is very widely used by a lot of people. Suppose you're selling any long-term capital asset other than house property. Then out of that, suppose you have invested in a startup and that startup has done very well. So that startup shares are referred to as unlisted shares, and you are selling those shares. So then out of that gain, you can buy one residential house, and the amount that you have to invest is sale consideration received. So if you do that, you will be able to plan your tax, and you can claim a major amount as exemption. Another thing which we would like to cover is taxability of various instruments like fixed deposits, national savings certificates. So fixed deposits, the interest is fully taxable as per slab rates. Principal is non-taxable because it is the mool. It's not an income. There's this is not eligible as any tax deduction. There's only one deduction available. If you do a tax saving fixed deposit for 5 years, then it is being eligible as a tax deduction under section 80C, that too under old regime, that we have covered in next bullet point. National savings certificates, interest is also taxable. Assessee gets benefit of 80C, and principal matured amount is exempt except last year of interest earned. This is also eligible for 80C deduction. Public provident fund interest is exempt, principal on maturity is exempt, eligible for 80C. Sukanya Samriddhi Yojana, not taxable, interest is not taxable, and principal on maturity is also exempt. This is also eligible under 80C. Sukanya Samriddhi, especially for girl child. Equity linked saving schemes, interest is not taxable, dividend received is taxable. The gain that you arise on sale of the proceeds is taxable under the head capital gain. This investment is eligible for deduction under section 80C. Then we have NPS, then we have ULIP. Depending upon the interest is non-taxable, principal taxability arises subject to various conditions. NPS is eligible for deduction under 80CCD and 1B, and ULIP is eligible for deduction under section 80C. Another important investment, taxation on gold investments, which I would highly recommend. So Reserve Bank of India from time to time introduces the scheme of sovereign gold bonds, and there are various series which are being introduced. Normally in a year, around 4 series are being introduced by Reserve Bank of India, and anyone can invest in these sovereign gold bonds. So this is basically buying gold, not in physical form, but in demat form, in paper form. So this is different from physical gold. This is different from the gold that you buy on exchange, those gold V's. This is a sovereign paper which you are buying. So this will actually give you an appreciation of the gold, gold appreciation. Okay, this will actually give you appreciation on the gold, whatever is happening. So over a period of time, we have observed that gold is every time appreciating, and our elders also say that please invest in gold. This is a great asset to invest. So when you buy these sovereign gold bonds, the minimum maturity is 5 years, and the maximum maturity is 8 years. So if it is maturing in 8 years, then there is no capital gain tax. You don't have to pay any capital gain tax. And if you mature, if you are in need of funds and you have to mature it by 5 years, then obviously you have to pay a capital gain tax. And interest, you also get an interest of 2.5% per annum. So that interest is being credited to your bank account, that is being charged as fully taxable. So this on this also capital gain is being charged based on the holding period, whether it is coming out to be short term or it is coming out to be long term. Again, I would like to hand over to Akshat to have a quick round of quiz on the topics that we have covered. Over to you, Akshat.
Right. Sure. Yeah, I think the quiz, question on the capital gains are super, super important as well. Asta, okay, maybe I can share my screen.
Just 1 second. Okay. Visible?
Yeah, yes.
Okay. So should
able to see me clearly, is it? Yeah, maybe that's.
Actually, that might be due to the lighting.
Oh,
coming
okay.
from the window. Yeah.
Yeah, could be. Yeah, there's sunlight coming directly, so maybe that's it. So sorry for that. Okay, I hope you can see the questions now. Miss Nisha is an employee in ABC Limited. Her total income includes her income from salary amounting to 10 lakh rupees, long-term capital gain about 1 lakh rupees, a short-term capital gain of 50,000 rupees, a long-term capital loss of 10,000 rupees. The capital gain that shall be chargeable to the tax for the PY would be how much?
I think so. Someone is saying B, someone is saying C. So should we go to the answer?
Yes, Asta.
Okay, so the answer is 40,000 in this particular case, because here we have a long-term capital gain of 1 lakh, a short-term capital loss of 50,000, and a long-term capital loss of 10,000. So long-term capital gain is short-term capital loss and long-term capital loss both can be adjusted with long-term capital gain. So out of the total gain of 1 lakh rupees, you'll be able to claim a deduction of 60,000 rupees. So the total gain that will be chargeable to tax in this particular year is 40,000. However, suppose in this particular example, we have not covered that aspect that up to a gain of 1 lakh rupees will be exempt. So in this particular example, you have to take a assumption that 1 lakh has already been claimed as exempt. So
Correct.
We'll go to the next question.
Long-term capital gain becomes 1 lakh plus another 1 lakh. So
yes. So this is another question related to capital gain, wherein we just wanted to give you an aspect as to how the adjustment of gain and loss will happen. So in this, their income from salary is 5 lakhs, short-term capital gain is 1 lakh. We have a long-term capital loss of 50,000 and a short-term capital loss of 30,000. So the three options are capital gain that shall be chargeable to tax of the previous year would be 20,000, 1 lakh, or 70,000. So most of you are answering it as C. Okay, so everyone is answering C. So let's see what's the answer. Oh, we've got some A's also. So we'll just go. So the answer is C, because the short-term capital gain can be only adjusted with short-term capital loss of 30,000 and not with long-term capital loss of 50,000. So that amount of capital gain that shall be chargeable for tax in the previous year will be 70,000, and the long-term capital loss of 50,000 will be carried forward for future years. Okay, so now we'll almost come to the end of this presentation, and we would like to cover some key takeaways from the workshop, which I would like to just highlight and give you as a key takeaway. So the first one is check your salary structure at the start of the year to maximize tax benefit. We have given you some options which you can speak to your employer, modify your salary structure, and maximize your tax benefit. So check your salary structure, what your employer is offering, or if you're changing jobs or with the existing employer, just have a look at your salary structure whenever you're finalizing it. Carefully calculate HRA. If rental is 50,000 or more, deduct TDS, obtain the PAN of the landlord. After deducting of TDS, pay to the government. So all these steps you should take care in case of HRA. Calculate tax under old regime and new regime to check whichever is more beneficial to you. We'll give you that Excel sheet which will help you to calculate which regime is beneficial. Do analysis of Form 16 versus Form 26AS versus bank statement versus AIS versus TIS. Check your 26AS for high value transactions. Make sure to consider that in your income tax returns. Then if you have any interest on housing loan in self-occupied property or let out property, ensure that you consider that in return and claim that as a tax benefit. analyze all your bank statements, all your credits especially, to ensure that you have taken care of all the aspects while finalizing your returns. Close and consolidate your bank accounts if more than 3. I highly advise not to have more than 3 bank accounts, but because it unnecessarily expands your horizon and all your incomes are there in some accounts, some in some accounts. It's better to consolidate and have it maximum in 3 bank accounts. To claim losses, returns have to be filed on time. Whenever capital gain is there, check cautiously what you can do to reduce your capital gain taxes. Either you can invest in some issue, or you can incur a capital loss, or you can divide that capital gain into 2 financial years. So manage it in a way that you don't end up paying very high taxes under the head capital gain. Even if you are opting for new regime of taxation, still do ATC, tax-free investments, because that will help you plan some of your investments, be it PF, be it PPF, be it Sukanya Samriddhi, be it tax saving FD. Right now, FDs are being offered at a very good tax interest rates, around 7%, 7.25%, 7.5%. That's a good rate. So make a FD, at least do some investments. And all the income and investments should be fully taken care of and fully disclosed. Pay proper and full due taxes to the government. Ensure that all the income are being included in your return, due taxes are paid on time, your returns are filed, so that you don't end up receiving a income tax notice. But even if you receive an income tax notice, don't worry, because if your things are in place, you will have answers to each and every question. Consult your chartered accountants if you want any proper guidance, or you can respond it on your own also. So thank you, friends. Thank you so much for such a patience learning. And now I'll hand over it to Akshat to take it forward. I have completed my presentation here, and it was wonderful addressing you all.
Thank you so much, Asta and Akshat, for the wonderful session. Learned a lot of new concepts this time over the last session that we've done last year, which is how to set off losses. That's a very, very important topic, I feel. So before we move on to the Q&A section, I would just like to run a poll to understand how we've done, in terms of, passing on the important information to all the participants of the session today. Request all the participants to just take a moment and put your valuable feedback in the form, in the feedback poll that you're seeing on your screens. This will help us curate more sessions like this, bring in more efficient speakers like Asta and Akshat themselves, and get all the important information to you. Thank you so much. I see the poll getting filled, and until then, we can move to the Q&A section. Akshat, over to you.
Sure. Thanks, Shiva. Yep, folks, do give us your feedback. Really means a lot. We, in fact, after each and every session, I kind of give multiple calls to Shiva to get that feedback, because we really look at each and every feedback very particularly, and so does the Ethica team. So please do share if there's any scope of improvement. Feel free to put in that as well, because we'd love to improve on all our deliverables as well as capabilities. At the same time, there's a very small request. I've just posted on my personal LinkedIn about this session that we did. It would mean a lot if you could take out just a minute or two and share over a comment what was your unique takeaway from the session today. Right? I think, we could collate that list of unique takeaways, and, that's something that we'd work on and bring that up. It would also help us. I'll be super honest, not joking. It would also help us with our marketing. So please do take out a minute and just share your unique takeaway. We'll give you a minute right now so that you could fill in the poll that Shiva's launched, and take a minute to put in your comments in the LinkedIn post. Feel free to connect with me. Feel free to connect with Asta. In fact, if you need any assistance with your personal tax filing, I'll share an email ID as well as a phone number. Once again, the intent is not to kind of, make you sorry, I was just pasting that. Yeah, the intent is not to kind of sell you anything or make you buy products which you don't need to. The intent is absolutely to give you the best of possible. You've seen these and seen that in the sessions that we've delivered before, and that's how that's the reason why we started Pennywise in the first place. So
and I just wanted to add one thing, because I'm just observing that some people are going out. So I'm staying back to answer all your questions. We are here and we'll address all your questions.
Absolutely. The Q&A is yet to happen, right? So guys, do be here. I'm just looking at the chat. Sorry, can't find. Oh yeah, now I find the chat. The chat had gone somewhere. So yeah, here are the
Akshit, if you don't mind, sorry to disturb. If you don't mind, can we also showcase that contact us screen?
Yeah, definitely. That's what we were doing. It was just putting it down there on the chat. And Asta, if you could just go up a bit, yeah. Just go down, Asta. It was there on the slide. Yeah, one more. Yeah, that's it. Right. So these are the ID and the email. This is the phone number and the email. The phone number is available on WhatsApp. Right. So just drop us a text and someone from the team would reach out to you shortly. And in fact, if you'd want to, send out some details over an email, taxsolutions@pennywiseapp.in is the ID for that. So once again, absolutely, feel free to ask your questions in case you need some assistance with, things that have not been done properly in the previous years, or something that you need assistance with in overall to plan. Absolutely, feel free to reach out. We try to help you the best we can. Okay. And yes, feel free to connect with us on LinkedIn as well. There's nothing of the sort that we wouldn't reply, or we're just trying to get connected to you. We love connecting with new people. All of us at Pennywise, we love connecting to new people. We love interacting. We love solving your problems because I'll be honest, that also helps us learn in this journey. Okay, moving on, Asta, I think we are good to go. Oh, before we move on to the Q&A, there's one more thing that I quickly wanted to share. I think a lot of you are already, and I'm sure some of you are attending the session and then you would have attended our previous sessions as well. But there is one particular thing that we do, which is our community group. This community group is something which is based on WhatsApp. There are a number of people who attended our workshops in one or the other format. And the intent of that community group entirely is to help you solve your questions, help you understand the mistakes from people that I've done, right? So what happens is this has close to about 600 people right now, in fact, more than 600, where people who attended our workshops, and if they have any questions, they put in there, right? Usually the people themselves answer and they kind of share their experiences. It's moderated by the Pennywise team. So Asta is there, I am there, Shiva is there, right? And then we have our own set of experts who also help you with all those questions. In fact, it's a community where all of us could learn from each other's mistakes. I'll just quickly share one example. There was some person who was missold a product by a financial agent. There was a senior leadership person from the same company who was not an agent, but a leader in that company. And they were able to connect together and help solve that problem, right? So mis-selling is a huge problem in this particular industry. I think that's what Ethika is working on from the insurance aspect. That's what we are working on from a financial education aspect. And that's what every one of us is wanting to improve in this particular industry, right? So I will just quickly share the community group. Give me 1 second. It's a WhatsApp group. Absolutely feel free to be a part of it. It's lifetime free. You need not, we will never ask you for any money or anything of that sort. I will also send this over the email in case you want to join later. But yeah, that's the group. Feel free to join in. Okay. Ciao. Perfect. So let's move on to the question. Let's start with the Q&A that I have, Asta.
Yes.
If you like, you can.
Should I go up or should I just start from the latest ones?
Yeah, I think you can start from.
So I think I'm able to see a question of Mr. Ashwin Rao, though paid all my tax dues during ITR filing. I still keep getting demand notices. I have even responded on incometax.gov.in under pending section. Can you help in rectifying this? So yes, Mr. Ashwin, obviously we can help in rectifying this. We provide all type of services, but said that you can also do this part of rectification yourself. Normally what happens is that when these demand notices come, they even if you have paid all the taxes, but sometimes it happens due to technical glitches, they are not able to give you credit of the self-assessment tax or the advance taxes. So you will from the there's a intimation order referred to under section 143(1), which every individual receives when the return is being processed. So either you would have received in your email ID. If you're not able to check that on your email ID, you can log into your portal, request for that intimation. Once you receive that intimation, you'll be able to see why that demand is coming. And the moment you are able to see why that demand is coming, you can prepare a letter and reply to that demand notice, mentioning the details and attaching the challans. Even that you can do. If you still want, you can connect on this email ID or on this mobile number, and we'll be happy to help. Then next question that I am able to see is, if the landlord doesn't provide PAN, what is the other option we can claim for HRA? So see, if the landlord PAN is compulsory in case you are paying annual rental of 1 lakh rupees or more. If the landlord is not providing you the PAN number, you should request him that's a income tax provision and he has to provide. And that's all I can say. Or otherwise, you can ask him that he can take the rental income in 2 to 3 hands so that 1 lakh annual rent criteria doesn't get hit. But it is mandatory for him to give his PAN number, because he has to show. Normally in such scenarios, people don't give their PAN numbers because they don't want to show the rental income in their return, which is not correct. Since you are paying the rental income, he has to show it in his return of income. Otherwise, that will create a problem for you as well as for him. So please insist him on obtaining PAN number. So many of the people have asked.
Sorry to disturb. If you can just exit the screen sharing, we can see you in full screen.
Sure. I'll do that. Okay.
Perfect.
Okay. So many of you have asked that, will you be providing the Excel sheet and the presentation? Yes, we'll be sending you the Excel sheet and presentation. And if you then also have any doubts or anything is there, then we'll be happy to help. And I am here to answer all your queries. What all will include in LTA leave travel allowance? Your actual domestic journey, airfare or travel affair or bus fare is covered under the deduction that you'll get under LTA. Then sheet we will obviously provide. I am not sure of the recording. Regarding the recording, Mr. Shiva can help whether the participants will be able to get recording.
All the participants of the session will get a link to the recording of the session plus the Excel sheet and the presentation. So please be rest assured.
Okay, and there are a lot of thank yous. I'm not able to see the questions. Okay, I'll just go up.
So Asta,
we can take the questions from the Q&A section if that
is. So SGB provides interest rate of 2.5% every year. Yes, 2.5% every year. Yes.
So Asta, we requested everyone to add their questions in the Q&A. So I think we can take that.
I was seeing the chat. Sorry. Yeah. I was seeing the chat. Okay.
No worries. So
I'll just go to the.
Quite a lot of them.
I'll take the open ones. There are 27 questions. Now I'll take the open ones.
Correct.
So the first question is from Mr. Mohan K. Apart from ATC and NPS and medical, can we save tax without home loan and donation? Can we save tax without home loan and deduction? So yes, you can. I mentioned that you can add children educational allowance. You can add transport. You can add hostel expenditure allowance. You can have a benefit of car lease. You can have a benefit of HRA. Then you can do donations. Then you can claim deductions for the these, if you have affordable group housing houses that you've taken, for any electric vehicle you've taken, and that's it. Otherwise, obviously, Sorry?
Even education loan, in case there
Yeah,
is
education loan also you can take a deduction. So the next section is, can we get the session recording or any summary notes? This obviously we have, Mr. Shiva has answered that yes, you will be getting the session recording. Summary notes, I think so the presentation will act as summary notes. What is LTA? What is LTA is not included in salary structure provided by the company. If the LTA is not included in the salary structure provided by the company, you'll not be able to claim LTA. So the best is to discuss it with the employer and get LTA included in your salary structure. You have to modify your salary structure to avail the benefit of leave travel allowance. Can I apply for that? I've answered it. The question from Mr. Vishwanath Biswal. Please explain more about LTA. Is LTA for office work only or for vacation as well? Sir, LTA is not for office work. For any office work, your employer will be reimbursing you the expenses that you will incur. LTA is not for office work. It is actually for vacation. So the main intent of legislature to introduce leave travel allowance is that normally it is considered that if a person is being employed and he's staying at a place which is far from his hometown, he has to travel once in a year or once in 2 years and go back to his hometown and meet his family. So with that intent of the legislature, this LTA was provided. So it is basically for going to your hometown and meeting with your family, but now it is being used for domestic journeys which need not be your hometown. So for a vacation, yes, domestic vacation you can avail. Is HRA tax exemption under old regime valid for Delhi NCR region? Example, Noida, Ghaziabad. Sir, Noida, Ghaziabad is not covered under Delhi. It is covered under NCR, and in case of HRA tax exemption, the third component will be considered as 40% of the salary instead of 50% of salary. I hope that your question is regarding that only. Can you please explain the rules for LT? I think I've already done in the previous 2 questions. Is it a good approach to book loss in stocks and buy it again for tax harvesting? How to claim this loss? Yes, you can claim. It is good to book the loss if you have a corresponding gain in your in that particular year for the offset. So it is always good approach to book the losses, and so that it gets adjusted with the gains, and then you can buy the stocks again. But don't do speculative trading, because then you will end up being charged to tax under business profit and gains under business and profession. So don't do speculative trading. Don't do buy and sell same days. Don't do that. Do buying and selling only for the purpose of investment, and do this consolidation in the month of February and March. We can claim site loan also. Arunji, I'm not clear with the question. Can you please explain the question again? Can we claim site loan also? I'm not able to understand. How to show shares detail in tax? So whatever shares you are purchasing, you just need to maintain a record of that. That doesn't go in your income tax return unless and until your income, if your income is more than 50 lakh rupees, then you are obliged to disclose your asset and liabilities in the tax return. If you said so, if you are only doing purchase, no disclosure. If your income is less than 50 lakhs, if you're selling the shares, then it will be taxed under the head capital gain. So sale consideration less cost will be net capital gain or loss that will be charged under the head capital gain, and that has to be considered while you are filing the return. What if LT is not part of salary structure? Can we declare it directly during ITR filing? No, you have to speak to your employer and modify the salary structure. What if standard PF deduction? What if standard PF deduction greater than 12%? Oh my God. Just a second, it just moved on. Is greater than 12% employee and 12% employer. What if the deduction is less on both employer and employer part? Even if the deduction is less, whatever is being contributed in PF, if your total contribution is up to a maximum amount of 1,50,000, that can be claimed as a deduction under section 80C. If Form 16 has some mistakes per individual understanding, can we change the values during ITR filing? Yes, definitely you can change the values as per during ITR filing if there is some error in Form 16. Although I would request that you should bring those mistakes in the notice of the employer, speak to the HR and get those Form 16 revised, because the data which is there in Form 16 is being it goes to the income tax department in the report of TDS returns. So if you change the data, your data and the Form 16 data will have a mismatch and you end up receiving an income tax notice. So you can adopt the correct values in the ITR filing, but do get your Form 16 also revised. What is capital gain? Capital gain is a gain. Capital gain or loss is actually a gain on sale of shares on your investments, like sale of shares, mutual funds, or your residential property, or a commercial property, or your agricultural land. Whenever you sell these things, a capital gain or loss arises. I purchased 2 SGB last year. 2 sovereign gold bonds last year, one under DMAT option and the other without DMAT option. I sold the DMAT bond. I'm not getting an interest for the second one. After 5 years, how can I sell it? Please help. Sir, Mr. Harita Namagari. So obviously, whether you buy it in DMAT form or you buy it in non-DMAT form, you will receive the interest. Please check with the investment advisor, with the broker through whom you have bought the sovereign gold bonds. You have to get the interest of 2.5% annually. After 5 years, what you can do is the physical bonds that you had bought instead of non-DMAT form, you can just get it dematerialized and sell it online. So then there will be no problem. But I would highly recommend, if you're not in a need of money, sell it after 8 years, because if you're selling at the end of 5 years, you will have to pay a capital gain tax. If you sell at 8 years, you will need not pay any capital gain tax on the appreciation. So that will save a lot of money. Which is the best option in long term between NPS and same amount of investment in a good mutual fund? So it depends which mutual fund you are opting, and how is your time, what is your time horizon, what is your age, what is your risk appetite. I will not be able to answer this question just directly, that whether NPS is better or mutual fund is better. We have to see a lot of factors.
Yeah,
Yes,
just
Mr.
to add on to that question, Asta, I mean, I can just
Yes, yes, sure.
So I think NPS you must do up to about 50,000 rupees, because that helps you cover the tax portion on that, right? You get an additional tax benefit, and then in a passive way, it helps you save for your retirement. So yes, you should at least make about 50,000 rupees of investment every year in your NPS. On your mutual funds, yet again, right? Everything depends on the goal, just like Asta was saying, whether it's a short-term goal or a long-term goal. If it's a long-term goal, you should go with that. If it's a short-term goal, you should go with, debt-related funds. For long-term, it should be equity funds, right? So mutual funds is altogether a separate discussion. But you can't compare both of them in a way, because NPS is required completely for your retirement, which gives you an additional tax benefit. However, mutual funds are for all your short-term, long-term goals.
Okay, so can you provide these slides? Yes, we'll provide the slides. Can declare composite in tax? I could not understand the question. Can we declare composite loan in tax? What do you mean by composite loan? Mr. Sai, can you just explain your question? Mr. Mayur, in new tax regime as employee, how I need to declare investment declaration sheet? Just 1 second, I think so. The Q&A is just moving. Yeah, in new tax regime as employee, how I need to declare investment declaration sheet to accounts team. I have idea for old regime. In case of new regime, you will not be able to get a deduction of maximum deductions. Only in case of let out property, if you have an interest, that you will be eligible to claim. So if you have that, you can just give that proof, write it on a paper, and give that to your HR. Car loan will be taxable. Car loan, no, car loan is not taxable. It is a liability. So liability cannot be taxed. If you have electric vehicle car loan, then you will be able to get a deduction of that interest up to an amount of 1,50,000. So car loan being a liability, not taxable. What maximum amount can be claimed in tuition fee for ATC for 2 children? ATC, irrespective of whatever you do, 2 children, 1 children, anything, maximum amount 1,50,000. Can we claim medical bills? Medical bills. This particular medical reimbursement was being scrapped by the government, and a standard deduction of 50,000 was introduced. So now medical bill is not available. However, there is a preventive health reimbursement, preventive medical reimbursement that can be claimed by individuals if you have drawn some cash and you are incurring some medical expenditure. So an amount of 5,000 towards preventive health checkup can be claimed irrespective of the medical bills. I have PPF account. The PPF account statement is fine to show as investment proof. What all has to be included under section 80C for this? Yes, PPF account is perfect to be shown as an investment proof. You can just obtain your latest PPF statement. If your amount, whatever amount you've contributed for that year will be considered as a 80C deduction, and whatever interest you are earning on PPF account is exempt. So do show that under exempt income while you are filing the income tax return. If my property is under construction and possession will be in the upcoming financial year, and home loan has already started and paying loan EMI for last 8 to 10 months, can I mention principal interest amount paid for any tax benefits if applicable? Sir, right now your house is under construction, Mr. Jay. So you will not be eligible for claiming the interest amount. Once you get a possession certificate, so then you can claim the entire amount from the start till the possession certificate over a period of 5 years, 5 equal installments in 5 years. So that will be eligible, and you can claim that amount under the head house property. Is there any tax form to fill for 4 lakhs per annum salaried income? Is there any tax form? Most probably, if you have only salaried income and 4 lakh rupees, ITR 1 will be applicable, ITR form number 1. But I think so, since you're 4 lakhs per annum, you will be only eligible to file your return. There will be no tax because you'll get a 87A rebate. So there will be no tax. Composite loan, I mean, if we take plot loan and construct after 3 years, that would come under composite loan. Can I show plot loan in tax? So if you are whatever interest you will pay, so whatever principal you will pay, that will be eligible under section 80C, and whatever interest you will show, same thing till possession, no benefit. After you take the possession of that, you start that's completed and you take the possession, it will be available over a period of 5 years in 5 equal installments. I think so I have answered this. Can we claim medical bills? The answer is no, because it is submerged into the standard deduction of 50,000 rupees. If the medical bill exceeds 50,000 rupees a year, how that can be claimed? That cannot be claimed. I would advise you to take a medical health insurance if your medical bills are exceeding 50,000 rupees a year. So in that scenario, your medical bills will be covered by the insurance that you are taking, and you can claim the medical insurance premium as a deduction under section 80D. I think so Akshat would also like to add in this question. I think so.
Sure. Yeah, I mean, no, I think you covered it.
Okay. Okay.
I think you said
some YT short videos creator claims that we can make our bank loan interest free, claiming something like doing SIP or let's say X% of principal amount for loan period. How practical is that? I am not aware of any such schemes.
So basically, I think I've also come across this video. Basically, what they say is, let's say if your EMI is about, for example, 40,000 rupees, then 1% of that EMI, or about 400 rupees a month, into certain amount. I mean, basically, what they're saying is, start in parallel another investment that could give you about 12 to 13% returns. And let's say, for example, if you have a 20-year home loan, right? So if you parallelly also invest about 1 to 2%, or I don't remember the exact percentage of amount parallelly into another mutual fund scheme that could give you 12-13% returns, then over a period of 20 years, whatever total interest you are paying would kind of, the mutual fund amount would have grown up to that amount. So that's a kind of a way of looking at it. I'll be super honest here. I think, most of the people who are giving this advice on YouTube have not taken a home loan. and as much as I respect them from creating these videos, I think prepayment of home loan depends on multiple things, and the first thing being your mental stability. So if you feel that there is something that you want to parallelly keep paying off your home loan, and you want to finish up your home loan within 5 to 10 years because you want to remove your liability, please go ahead with that, right? Don't think that it's okay to keep the loan for 30 years and then pay the entire amount once and for all. So yeah, I mean, this requires a number of discussions, but I was just trying to explain the question that you answered, that you asked.
Okay, so the next question is how to claim for HR exemption. It was not declared at the beginning, but can be applied now. So there are 2 times when an employer asks for investment declarations, one in the month of April and one in the month of January. If you forgot to give in the month of April, then you should include that and give in the month of January, so that for the final calculation, it can be considered and your tax can be calculated accordingly. So it can be applied later on. There was a pending amount of 2 lakhs on my credit card. I used rent option of Magic Brick to get cash in my account, and by using it, I paid the credit card bills. Will that be considered as income, as it is credited from Magic Brick to my salary account?
No,
but you'll have.
Yeah, I can take this. So this is not an income. It's not coming from your employer, right? So this is a kind of a loan that you're taking from Magic. Right, so this will be treated in a fashion of a personal loan. Check your CIBIL report. It will be mentioned there as to how is that particular company considered, which kind of a loan is that considered.
Right. What section is considered for HRA deduction? Section 10, subsection 30.
Okay, wow, Asta, many
so
questions.
you've covered all the questions. I think so. You guys have also answered a lot of questions. 91 questions were answered.
Wow, absolutely.
That's great.
I think someone has raised hand. Someone would like to ask something.
And just as a reminder quickly, sorry, I just pasted, I mean, few of you were asking for the community group. I've just pasted the link again, and I've also pasted the link of the LinkedIn post again. Please take out a minute, please, it's my request. Take out a minute and quickly share your comments with us. Trust me, it really means a lot to us.
So someone has asked, how do we claim 80 TTA? So when you're filing a return in the deductions exhibit, in the deductions tab, there's a deductions, all deductions are there, 80 TTA, 80 TB. So whatever is your amount from savings, just put that in that column. So actual amount of saving interest or 10,000, whichever is lower, you will get a deduction. Akshat, I think so 2 participants have raised hand. Mr.
I see there's only one.
Okay.
I'm pushing him to the panel. Hi, Shravan. If you can hear me, please unmute yourself and ask your question, please.
Hi, everyone. Hi, Akshat. This one is for you. Like you answered my question. Like that amount which I took from house like Magic Brick, that amount was credited to my brother's account, not in my account. So like it will consider for him as a income.
No, so when you applied for that, did you put in, let's say, the PAN and the other details of your brother?
No, nothing. Because we did it like 40, we did it in 4 months, like we draw 49,000 like that.
So basically you transferred a rent from your credit card to your brother's account.
Yes.
Yeah, so in that case, that's a rental income. That's absolutely. I mean, if this is the scenario, then that counts like a rental income for your brother, because you are paying the rent using the credit card facility which Magic Brick gives, and the owner that you are showing in this way, this case is your brother, right? So that becomes a rental income for your brother.
Okay, even if I have not used PAN card, then also, right?
Yeah. Because it'll come, right? It's a transaction greater than the 49,000. So it'll in the AIS TIS which Asta was sharing, it'll come, and I'll highly recommend, right? Since it's a big enough transaction, please consult with your concerned CA and see how it can be best.
Yeah. Thanks, Akshat. Thank you so much.
I think that brings us to the end of this session today. I'd like to take another opportunity to thank Akshat and Asta for doing this for us. Thanks for agreeing to do this for us and for all the participants today. You've been great. You answered a lot of questions. I think this is the highest that we've ever answered in a session. So thank you so much for that, guys. And we look forward to doing more sessions like this. We'll come up with something on tax filing as well in the upcoming months. And also would like to take this opportunity to thank all the participants today, coming in huge numbers and being all throughout the session on a Friday evening, trying to understand a lot of these concepts, which can be very confusing at times. But now looking at the reviews, I think a lot of people are thanking Akshat and Asta for clarifying in a very understandable manner. Thank you so much, guys. It's a pleasure working with you, and it's a pleasure hosting all the participants today. Look forward to meeting you on the next session.
Thank you. Thank you so much, Shiva. Thank you. Thank you, everyone.
Thank you, Shiva.
Thank you.
All the